Well, thank you very much. I think as we kind of take a look at dairy, we're going to start and just break this down to where some of the bulls in the marketplace are and where some of the bears are. Some of the bulls, we would think, we would hope, we'll find out in a second, is the new processing capacity that is kind of taking place in the dairy industry. The way that that becomes a bull is if that creates a big enough milk draw or milk demand without that supply response happening, right? If we get a lag between those two things, we would expect prices to increase. We'll see in a second whether that's happening or not. Another bull factor, at least that I think a lot of you in this room have heard about at least, is the beef market and what that means for that dairy producer. So we'll dive into that as well. The two other bull factors that I think we can put on here on the top are exports, and we'll see in a second whether those have been bull factors or if they've been baseline price supportive factors, right? And the other thing is we have kind of seen this small conglomeration of, I'll say, minor policy changes that I wouldn't necessarily call bulls, but I think they are at least industry supportive, right? So think Whole Milk for Healthy Kids Act. Are we going to see a big effect in producer pay price from that? In the short run, probably not. In the long run, could we see some different choices for fluid milk product by some of these individuals that becomes more accustomed to their palate? Possibility, right? So the other small changes, things like dairy margin coverage. I think we've seen some things there in that tweak that can potentially be supportive. I wouldn't call it a bull market factor, but at least be supportive on that dairy industry side. I think some of the other wild cards are things that we're seeing a lot of price pressure from right now. Policy is always a wild card. The tariffs haven't had, they've had some effect. We've seen some front running from them. So like as you kind of take a look at graphs now, we have these big peaks and valleys for certain exports of products. Labor is obviously an issue, and then a lot of it is the unknowns, right? I think there's just inherent volatility that comes through in market pricing from policy uncertainty, much like we talked about earlier in the day here. The other is that right now we are getting more supply domestically and internationally. I think that might kind of point to this answer that we got to at the beginning of, is this new processing a bullish or bearish factor? But we are seeing more product there. The other thing is I've kind of termed this the phantom supply response. We're getting more components, we're getting more solids in our milk production, and we'll kind of see what that means here for the industry as a whole and what that supply side effect has been. And the other portion of this is that we're getting a lot of mixed market signals. The producer is being told kind of contrary things simultaneously, which make it kind of hard to make some of these decisions, especially as we look at it from more of a long-term context. So we're going to dive into that as well. I think a good place to start here is on this investment capacity investment. So right now, according to IDFA, we're about $11 billion in new processing capacity that's been announced. And with this, the announcement's kind of hard because we don't have exact details of everything. We don't know, what all the capital expenditure is. We don't know what all of the fluid milk intake is. What we do know is that there are a handful of projects that kind of are dominating that $11 billion investment. And we don't know how much processing capacity is going to be sunset or diverted from old plants to new plants. We don't know how much of this is complete new build out versus expansion versus efficiency, right? But the argument I make is that it's $11 billion. That's a big number, right? So no matter what, it is more. So if we're looking for that direction arrow, that goes up. So if we're taking a look at what that looks like, let's just zoom out for the last 20 to 50 years. If we go on an annual basis, we see about between $1 and $2 billion of investment in that dairy processing space, and which kind of equals to about a 0.08 to about a 1% increase in product output from that investment. Right now, from 2024 to 2028, which I realize is 4 years, but really I think you can almost think about it like 3 years, because a lot of this announcements happened at the end of 2024 and is expected to come online or be in place towards that beginning of 2028. So that means that we're looking at anywhere from, high twos to high $3 billion investment in a year. So we're taking what normally took a very long time period and putting it in a 3-year space, right? And my argument for that is that I think we could be looking at a structural change in the dairy industry from that supply side. And if we do, that means that we're not shifting along our supply curve when we think about our normal factors of supply, right? We're shifting that supply curve out. And if we're doing that, that means we need to find fundamentally new price ranges, not only in milk price, but in product prices as well. So I think right now that's what the market is trying to figure out, is if this is a shift in supply and that curve is moving out, where is it? And then also, where are we along that curve? So I think that's kind of that big question right now that everybody is trying to figure out. This is a map that I put estimated $11 billion of investment. This map has about 9 billion, 9 billion of that. After that point in time, honestly, it was a big enough number that I didn't need to really count anymore because, like I said, that arrow goes up. But if we kind of just make like a weighted map of this, it kind of makes a T across the U.S. So these are those main bigger projects that are happening across the country that kind of stand out as far as capacity and investment dollars go. And we can kind of see as well that when we take a look at change in cow numbers from our most recent report, we get that T effect as well. So the big question here is, where is this milk supply coming from? How is this happening? How are we feeding this? So it seems like maybe we are shifting some numbers from cow numbers from certain regions to other regions, right? But I would almost go back to the structural question of if this is the case, and if that production capacity is happening in that manner that we think it is, that means that all future growth now is kind of structurally predicated on processing capacity and your geography to it, right? Which I think is kind of a greater question that we need to be asking as we go forward. So key takeaways from this. We don't really know where we're at and how much of this has come online. It could be 40%, it could be 70% that's already there. But that range corresponds to 5 to 15% of our U.S. milk supply. And so far, we've been meeting this demand about 70% through herd growth and 30% through productivity. When we talk about productivity, this is that phantom supply I was talking about. As of November, our change in milk production was up about 2.26%. When we take a look at our solids production, which is really arguably the part that matters, we're up at about 4%. This is calculated solids, just taking the averages. So what that means is that we're getting more and more in every single pound of milk, and it means that we need fewer and fewer cows in order to produce that. And this is where those calculations and solids come from. Every single year, we're just getting higher and higher and better in our solids production. The good news here is that pretty soon we won't need processing. We'll just have yogurt right from the cow. So you have that to look forward to. The other portion of this on that supply side is right now we have about a 4% increase in global supply of milk. That's a substantially large amount, historically significant. So not only do we have a greater supply of milk here, there's a greater supply of milk outside of our borders as well. The surprising part to this is that we have still been exporting product. How have we been doing that? Low prices, right? So cheese, we've been moving a lot of product. Butter, we're moving a lot of product. And our high proteins are moving as well. But when we take a look at our discounts, butter has been discounted 60, 70% compared to the world market. Cheese is 30, 40% discount to the world market. So it's hard to say that these export markets are being price supportive, right? Or adding premium to our price. We've just been clearing product, right? So if that's the case, That means that we're very dependent from a volatility standpoint on that space to create that floor. I wanted to take just a quick minute here and let's talk about the beef market contribution to milk revenues. You hear a lot of context, framing, headlines about what this impact is of the beef market on dairy farms right now. So this impact is just modeled impact, and I think there's going to be quite a bit of variety in individual farms on what their actual contribution is. But what I did is I converted this into dollars per hundredweight of milk. We're not talking hundredweights of beef. So I want everything in dollars per hundredweight of milk for that farm, right? We can see that from the beef market, and this is, I would argue, maybe a conservative a bit of a model, about $3.35 per hundredweight, right? Let's put that in greater context. In premium, so from base price plus a premium, right? Over time, we've seen that premium decrease many times, about $3-ish per hundredweight, right? So it seems like on that producer level, what we have been losing in the milk premium, we're making up in that beef premium, right? When we kind of do the math and we take dairy margin coverage numbers, just to kind of frame this, right? We see, okay, here's where our dairy margin coverage number is for income over feed cost. Then what does it look like with that additional beef revenue? So, you know, by and large, this is above that yellow line of that $9.50 level that we use for that reference price of margin for dairy margin coverage. But I would like all of us just to do some math quickly together here. This 2026 number, the assumption there is that we're going to have an all milk price of $19 and we're going to have a feed price or a feed cost of $10 per hundredweight. So let's take 19 minus 10, we're left with 9. We're all together here. All right, so far all we've done for that cow is we have fed her. So we need to milk her yet. Good baseline number for that, good goal target, $3 a hundredweight. So we have 9 minus 3 is 6. Now we need to pay the bank, so we need principal and interest. Let's go, we can go $2 to $3 on that. So we're at what, 4-ish, right? So all we've done is feed her, we've milked her, we've paid the bank. If we're going to put utilities in there and we're at, you know, what were we at, 4-ish, right? Let's take another buck off, we're at 3. We have not done any investment, we've not done any changes, we haven't bred her yet, we haven't paid for all of our other inputs, we haven't done anything, and we're left with, call it 3, right? So what does that mean for margin? It means it's pretty tough. So I don't think even with this beef revenue that it's really going to make up that difference, right, that if we had better milk prices we would see. Is it adding to the bottom line? Certainly. Would not argue that fact. Is it going to pay bills? Yes. Is it going to be the saving grace and that, hey, low milk prices don't matter? I think that's a stretch, right? So as we kind of look forward here, what does the income over feed cost look like? I think we're going to be very close to that DMC break-even number, right? One thing I think that's going to be very different this year and going forward is producers' inherent volatility in their price. I think we're going to see an increased variation in basis from literally one side of the fence to the other, and whether that's from your which processor you send to, where their product goes. Is their product clearing domestically? Is it clearing internationally? What % of their portfolio is exported, right? And also, as we get these new investments coming online, a lot of them are going to be quite specialized in product, right? So instead of having a large number of products in a product mix, we're getting increasingly commodified in our production schemes, and that's where our efficiency is coming from. If that's the case, you also could be consolidating volatility. So I think as you kind of take a look at producer pay prices, I think that's going to be one of the things that I would really think about and encourage people to look at is, hey, you know, where is my milk check being calculated from? Which portions of the market are feeding into this? Because I think that's going to matter a lot. For example, for cheese, if you're domestic, but your processor isn't capturing, let's say, the high-value whey, high-protein whey right now, which is kind of holding up that entire complex. If you're not capturing that, then the ability for your processor to increase pay based on that gets increasingly challenging, right? So I think there's just this very big mix of things that are happening right now that are all feeding into that. So I took the liberty of pricing out or mapping out how milk is priced for you here. And as we kind of take a look at what maybe some of those factors are that I would be looking at for that coming year, our production, I would really watch that. What is our butter production? What's our cheese production look like? Because as those are increasing, as this investment comes online, that's really going to feed into inventories. We have been very lucky that our inventories have been clearing. We've been more or less nicely in a range, but a lot of that's from exports. And we're clearing exports because we're cheap. So there's that. But I'd be watching some of our inventory numbers and some of our sale numbers. Our high protein whey has really been doing well, so we want to at least put that on there. But I think as some of our producers are getting their milk checks here in the next month or so, I think we could start to see some of this pressure on farm level profitability. So kind of looking forward here, I would say that we have. Let's call it an $18 per hundredweight milk price. The second half of the year, I think, is going to be really dictated by how processing capacity comes online, how, where, and how much, right? And then also what exports are. I think we've likely booked exports in that first quarter of 2026 simply because our price was so low. But if everybody booked exports, then they're good, right? And then also, if that's the case, we inherently are going to see more volatility in prices too, because as fewer things are booked, and as we're kind of in this low price region, there isn't a lot of incentives for buyers to take any sort of risk mitigation strategies, right? So what does that mean? It means that we can just kind of inherently see more price volatility as well. So I think that second half of the year we need a lot more information on in order to say whether it's going to be terrific, supportive, or not. And right now, like I said before, a lot of these mixed market signals. The beef market is saying, hey, maybe we want to have some retention in animals, maybe we want to make those animals. I think there's a lot more math that has to go into that to say definitively. But they're kind of getting this mixed this mixed message. Historically, when we saw expansion on the farm level for milk production, it was followed by a period of noticeably good margin. Right now, it's happening because we have processing capacity, because guys wanted to grow, and if they didn't say yes now, they might not have had a chance to say yes in the future. So that makes that decision for them, quite a bit easier if growth was even in their consideration set going forward for their business. So with that, we do have, feel free to check out our website here with more information, articles on many of these topics.